Welcome back to The Explainer. Today we're heading right back into Alex's Cookie Kingdom for part 3. If you're an 8th or ninth grader diving into the wild world of business, you're exactly where you need to be. We're going to check out how our favorite baking entrepreneur, Alex, actually measures his financial health. Because, it's one thing to bake a totally delicious chocolate chip cookie, but it's a completely different challenge to build a financially healthy kingdom. Let's see how he pulls it off.
So is Alex's Cookie Kingdom actually making money, or is he just making crumbs? How does a king, or really any business owner, know the true wealth of their kingdom? It's actually super easy to walk past a busy bakery, see lines out the door, and just assume the owner is rolling in cash. But to know for sure, we need 2 powerful financial tools to save the day. These are going to stop Alex from mixing up what he owns with what he actually earns. Okay, our first tool is the balance sheet. Now, in official accounting speak, this is a financial statement that presents an entity's assets, liabilities, and equity on a specified date. I really want you to focus on that phrase, specified date, because it's literally the secret to understanding this tool. It doesn't tell you what happened all year. It tells you exactly where the business stands, frozen on one single day.
To make this a bit more real, just think of the balance sheet as a financial snapshot. Imagine taking a giant Polaroid picture of Alex's Bakery at exactly 11:59 p.m. on December 31st. Just flash. That snapshot instantly captures the absolute true wealth of the Cookie Kingdom at that exact second in time. It freezes the money right there in the register, the cookies sitting on the shelf, and the unpaid bills stacked on the desk.
So let's break down the actual pieces of this snapshot, starting with what the business owns. We call these assets. Officially, an asset is an economic resource expected to be of benefit in the future, but simply put, it's just anything of value the business owns that helps it generate wealth moving forward. If we translate that back into our story, Alex's assets are the physical resources he uses to bake those amazing cookies and grow his wealth. We're talking about his massive commercial cookie ovens, those towering bags of flour inventory stacked in the back room, and of course the actual cash sitting securely right there in the royal vault. Every single one of these is an economic resource benefiting his future. But wait a second, Alex didn't just buy everything with cash straight out of his own pocket, and that brings us to liabilities. A liability basically represents debts or obligations owed by one entity to another. So the easiest way to remember this, if an asset is something you own, a liability is something you owe.
Think about the Cookie Kingdom again. How did Alex actually afford those massive, shiny, state-of-the-art commercial ovens? Well, he had to borrow money from the town bank. Since the bank helped pay for them, that debt is a liability. It's this real obligation sitting right there on his balance sheet snapshot, constantly reminding him that a portion of his kingdom's value is actually owed to someone else.
Which leads us perfectly to the final piece of the snapshot puzzle, and that is equity. Equity is the residual interest in the assets that remains after deducting liabilities. In everyday language, if we take everything Alex has, all his assets, and subtract everything he owes, his liabilities, we find what he completely owns, free and clear. That leftover amount, the residual, that's his equity. And that gives us the basic math of the entire Cookie Kingdom. It's a super simple formula. Assets minus liabilities equals equity. Let's say Alex's ovens, flour, and cash total up to $10,000. If he owes the bank $4,000 for that loan, his true ownership, his actual equity, is exactly $6,000. It's called a balance sheet because it balances out perfectly every single time. But, here's where we run into a bit of a mystery. If a balance sheet is just a frozen snapshot on day 1, and then we take another frozen snapshot on day 30, how in the world do we explain all the wild, chaotic, cookie-baking action that happens in between those dates? Alex needs to actually see the day-to-day operations happening during the month, not just those static pictures at the very beginning and the end. For that, he needs a totally different tool. To solve this mystery, we're going to bring in our second tool, the income statement. This is a summary of revenues and expenses over a period of time. Notice the massive difference there. The balance sheet was for a specified date, right? But the income statement captures an entire span of days, weeks, or even months.
So, if the balance sheet is our financial snapshot, you should think of the income statement as a business movie. Just imagine setting up a video camera right in the middle of Alex's Bakery. You press play on day 1, and you record every single cookie handed to a customer, every dollar hitting the register, every single bill paid for 30 days straight. Then you finally press stop on day 30. That moving picture, that whole story, that's your income statement.
Let's look at the actual stars of this business movie, starting with revenue.
Revenue is simply the inflow of money. It's the total amount of sales accumulated during an accounting period. Think of it as the top line of our movie script, tracking absolutely all the wealth coming into the kingdom before anything else even happens. Honestly, for Alex, this is definitely the most exciting part of the film. The Cookie Kingdom revenues represent the total cash collected from selling thousands of delicious cookies to hungry customers. Every single time that little bell rings on the front door and a customer buys a warm chocolate chip cookie during that 30-day period, that sale becomes a star actor, a piece of revenue in our movie.
But, well, as we all know, you kind of have to spend money to make money. And that brings us to expenses. An expense is something spent for a particular purpose or a cost incurred in running the business. Basically, operating any business requires constant, necessary outflows of cash, literally just to keep the doors open.
To keep this movie rolling and the ovens hot, Alex absolutely has to pay his operating expenses. I mean, he's got utility bills for the electricity running those massive commercial ovens. He has to pay fair wages to his hard-working royal bakers. Plus, he has to constantly cover the cost of ingredients. More sugar, more chocolate chips, more butter. All of these things naturally drain cash out of the kingdom during our 30-day movie. All of this leads us to the grand finale of our movie, net income. This is the excess, or the deficit, of total revenues compared with total expenses. It is the absolute climax of the story, where we finally find the bottom line to see if, after all that selling and all that spending, we actually made a profit or suffered a loss.
Let's look at the chronological flow of money through the income statement. It's a three-step process. Step 1, we total up all the revenue from our cookie sales. Step 2, we subtract all the expenses, things like those utility bills and baker's wages. And step 3, we arrive at our net income. This is famously known in business as the bottom line. Well, mainly because it physically sits at the very bottom of the report.
Now, if you imagine a really tall bar for total revenue standing next to a shorter bar for total expenses, net income is literally the physical difference between the two. If that revenue bar is taller, Alex has a positive net income, and that is huge because it means his kingdom is truly generating brand new wealth.
Okay, let's bring it all together now. On one hand, the balance sheet is our snapshot on a highly specific date. It proves exactly what we own. On the other hand, the income statement is our movie over a period of time, showing our actual profitability. The movie perfectly explains exactly why and how the numbers changed between last month's snapshot and this month. It fills in all the blanks.
So I'm going to leave you with this final thought. What would you do as a business owner if your business movie ended with a net loss, meaning your expenses were actually taller than your revenue, leaving your kingdom with less wealth than it started with? Think about how you'd rewrite that script for the next accounting period. Would you push to sell more cookies, or would you figure out a way to cut your expenses? Keep applying these fantastic tools, keep using your snapshots in your movies, and you'll be well on your way to truly mastering your own financial understanding. See you next time.